In this video, I'm going to discuss the general principles of taxation, starting with the word state. So what's a state? Normally, I explain this term by enumerating its elements as well as its inherent powers. When we say inherent, it's there without being given. For elements, we have 4. And then for inherent powers, we have 3. I'll start with the inherent powers. Number 1, we have the police power. And then eminent domain. And finally, taxation. And I will not be discussing police power and eminent domain because that's not the topic. What we will be focusing on here is taxation. But just to explain these two very briefly, and I will just say it, when we say police power, this is the power of the state to take your right, your property, because they are dampening the welfare of the people, of the public. Let's say there is a person who is positive in NCOV and he or she is outside, just walking freely. Although that is the right of the person to be free, to be out, since what he or she is doing is dampening the welfare of the people, the government can exercise police power and require you to quarantine yourself. So that's police power. And then for eminent domain, basically this is just taking private property and then they will pay you. Because for police power, they will not pay you. If they take your right or property, you will not be compensated because what the government is doing is for the people. But for eminent domain, the government will be taking your private property, but you will be given just compensation. For example, the government intends to create a road, and then at the center of that road, you have your place. And since that is affecting the flow of cars on that road, the government will most likely exercise eminent domain to just remove your property. They will buy it and then they will pay you. That's eminent domain. Now let's have the elements. Because whenever we say state, we are treating it synonymous to government. But actually state is more than that, given that the government is just an element of this state. For the elements, we have government. So I'll just write GOVT. And then we have people. And then territory. And finally, sovereignty. So this government is outright given the power to tax without being granted. For what reason? We have what we call the theory of taxation. So I'll just write it here, theory of taxation. Theory of taxation is saying, to put it simply, the government needs these taxes to operate. Basically, that's the theory of taxation. That's why it is inherent to the state to be given the power to tax, because the government will not operate without this funding, without these taxes. And in line with the theory of taxation is another concept called lifeblood doctrine. And in this doctrine, it basically states that taxes are like the blood of the government. And without the blood, the government would be anemic. It will be paralyzed. So the theory of taxation and lifeblood doctrine, they are kind of related, no? And with this idea, what's the implication? What now is the purpose of taxation? The very purpose, the primary purpose of taxation is revenue. Of course, the rest are non-revenue purposes. For example, you are adding VAT to foreign products so that local products would remain competitive, or maybe add taxes to liquor and cigarettes to discourage vices, parang ganun. So again, theory of taxation, the government needs these taxes to operate. Lifeblood, taxes like the blood, it will not operate without it. And then purpose of taxation is, the very purpose of taxation is revenue. And then, in a state, aside from the government, you have the people. And actually, if you think of these two, government and people, implied here is the reciprocal duties. The people will be paying the taxes, and in exchange, the government will be doing its services. And there is a concept for that one. It's called basis of taxation. So when we say basis of taxation, it's basically highlighting the reciprocal duties of both. So the people will be paying the tax, and in exchange for these taxes, the government will be doing the services. And then also part of the state is territory. And if we try to think of this in terms of taxation, you can only tax people under your jurisdiction, under your territory. And we actually have a term for this one. This is called situs of taxation. Situs is place. This one is also called place. So when we say situs of taxation, this is the area that you can tax, no, as a state. And finally, also an element here is sovereignty. So what does it mean? Sovereignty. Basically, it's independence, no? You have freedom from external influences. That's sovereignty. Okay? And if you have these four elements, you have a state. And the government here is divided into three branches. And of course, you know this, the legislative, executive, and then the judiciary. And you have to remember that these three are co-equal, meaning they are equal in power. And when you think of legislative, what comes to mind? The Congress, di ba? And Congress, you have the Senate, and then House of Representatives. How about in the executive? You have the President, the Vice President, and the Cabinet, the different departments. And then for judiciary, you have the Supreme Court and other courts. And by the way, legislative creates laws, right? Then executive implements the laws, while judiciary interprets the laws. So now here's the question. Given that taxation is an inherent power of the state, which branch gets this power? Is it the legislative, executive, or judiciary? Answer is legislative. This is where the power rests. No? But you have to remember that in the legislative, it's isolated to the creation of laws. So even if the power of taxation is in the legislative, it may appear that the other branches are also given the power of taxation. But primarily, it's with the legislative branch. But you have to note that in the legislative, it's isolated to the creation of laws. So they will just be creating. How about the collection? Will they be collecting? Legislative will not be collecting. To elaborate on that, let me give you the aspects of taxation. For the aspects of taxation, we have, number 1, levying or imposition. And this is the only aspect that is for the legislative branch. And this stage or aspect is also called the impact of taxation. And then for the other aspects, we have 2 more, number 2 and number 3, and they are resting under the executive branch. For number 2, it's assessment, and number 3, collection. Okay, assessment is basically just the computation, and collection is the getting of the taxes. And then levying, it's the creation of laws, no? And then these 2 is called the impact of taxation. So again, let me repeat. We have aspects of taxation, and under it we have 3: levying, assessment, and collection. Levying is also called as the impact of taxation, while assessment and collection are also called the impact of taxation. So the first one is in the legislative, while numbers 2 and 3 are under the executive. They are the one assessing and they are the one collecting. Sir, elaborate. Because under the cabinet, you have the Department of Finance, right? And under the Department of Finance, you have the Bureau of Internal Revenue. And this government agency is responsible for the assessment and collection. And just to add, the created laws by the legislative here are called national taxes. For example, income tax, value-added tax. So those are national taxes. Because under the president, you have the LGUs, or the local government units. They comprise your provinces, cities, municipalities, barangays. And what they charge here are local taxes. For example, community tax, that's cedula, or real property tax, that's amilyar. Those are local taxes. But you might be wondering, I thought the power of taxation is only given to the legislative. How come these LGUs are imposing local taxes? Okay, so you have to remember that the power of the LGU to tax is, let me write this, expressly granted. So this is granted to them. It's not innate. Unlike the power of the legislative, it's innate. Without being given, it's there. Again, to repeat, the innate power to tax is given to the legislative. Okay? So those are for national taxes. But under the president, you have the LGUs. They can also tax. They can also impose tax. But their power to tax is expressly granted. Not innate, not given, not inherent. No? This is expressly granted. So meaning, these LGUs do not have power to tax in isolation. The only reason why they have the power is because they are expressly granted that power. Now, I will write the definition of taxation. So here's the definition. It is the process or means by which the sovereign or the state, through its law-making body, so this is referring to the legislative branch, right, raises income to defray the necessary expenses of the government. And this is echoing your theory of taxation, lifeblood doctrine, etc. And with this definition, we can better understand the characteristics of taxation. So I'll write it here. Characteristics. Number 1, it's enforced. So tax is not voluntary. You are forced to pay tax. It's a forced contribution. Okay? So that's the first one. Second one, it's proportionate. Meaning, it is based on your ability to pay. If you are getting more income, you pay more. If you are getting less income, you pay less. And there is actually a concept to that. It's called the ability to pay principle. Another characteristic, it's imposed, levied by the legislative branch, which is explained earlier. Okay, the number 4, this should be imposed for public purpose. You don't use the tax for private purpose. It should be public. Then another, it is generally payable in money. So meaning, if you want to pay tax, normally you use money. But sometimes it may be in kind, meaning property. It can be in property. But generally, it's money. And then lastly, it's levied on persons, property, act, privilege, transaction. So if it is for persons, that's personal tax, right? Poll tax, capitation. For property, it's property tax. And then for the rest, it's called excise tax. This is personal, property, excise tax. Now, what is the scope of taxation? There is a mnemonic for this one. Since it's scope, the mnemonic is scoop. So, binisaya. So, what's scoop? SCUP. S is supreme, C is comprehensive, U is unlimited, and P is plenary. And given this scope of taxation, there should be limitations, right? So now I will talk about the limitations of taxation. This is divided into two. One is inherent and another is constitutional. I will only be focusing on the inherent. So for the inherent limitations, we have 5. 1, 2, 3, 4, 5. Again, this is inherent limitations. So let me set the mnemonic. Okay, the first P here is public purpose. And this is just a repetition of the characteristic earlier that it's for public purpose. It's limited because it's for public only. And then how about letter E? Exemption of government. Because it would not make sense to be charging the one who is charging. So if you do that, it's like you are transferring your money from one pocket to another pocket. So you don't charge the government. You don't tax the government. And then next, non-delegability of power to tax. This means that the inherent power to tax given to the legislative branch cannot be transferred to another branch. So it's limited only to the legislative. And then for number 4, it's international committee. Which basically is saying that you should respect the sovereignty of foreign state. So that's international committee. Okay? And then for number 5, it's situs of taxation. So again, another word for situs is place. So here are your inherent limitations. Public purpose, it's limited because it's only for public. Exemption of the government, exemption, this is a limitation because it's only centered to those not in government. Non-delegability, it should only be in the hands of the legislative. International committee, you will not be taxing foreign states. And then for situs of taxation, you're only limited to your area. So that's the inherent limitation. For constitutional, we have a lot, no? So I will not discuss that anymore. Just focus on the inherent. So that's for the limitations. And given that, I can now talk about the nature of taxation. And this is just a reiteration of some of what I mentioned here. Number 1, tax is inherent in sovereignty. So this was discussed, right? Number 2, it's legislative in character. So this is also mentioned. And finally, it is subject to constitutional and inherent limitations. Now let's proceed. Now I will talk about the tax classifications and distinctions. For the first, I will talk about in terms of person responsible. And here we have two, direct tax and indirect tax. So what's the difference? This is best explained by writing the should pay, the should pay, and then the actually pays. So if the one who should pay is the one paying it, that's direct tax. An example for this one would be income tax. Okay? If the one who should pay is not the one paying it, it's called indirect tax. An example for this one is your value-added tax. So again, for direct tax, the one who should pay is the one paying. For indirect, the one who should pay is not paying. Next, tax system. Let's talk about tax system. For tax system, we have two. We have progressive tax system, and then we have regressive tax system. So what's the difference? The tax system is progressive if direct taxes are higher than indirect taxes. And if this is the setup, like the one who should pay is the one paying, most of the time, it will be considered as anti-rich, right? Because they earn more. And then for the regressive, it's just the opposite. The direct tax is lower than the indirect tax. And this is anti-poor. Why? Because most of the should pay is transferred to other people. So it will be against the poor. And then since I'm talking about tax system here, what are the principles? Principles of a sound tax system. Sound meaning good. And the mnemonic for this one is FAT. F is fiscal adequacy. A is administrative feasibility. And T is theoretical justice. So let me just explain this very quickly. For fiscal adequacy, the money should be enough. That's it. No? Because the different departments under the executive will be submitting their budgets, and of course the government has to have money. And then for the second one, it's administrative feasibility. The keyword for this one is enforceable. It should be enforceable. Like when you are setting the deadline, it should be doable. When you are giving out the manner of payment, it should be clear, etc. And then for theoretical justice, this is just your ability to pay principle, no? Meaning, those who are getting more should pay more tax, and then those who are getting less should pay less tax. And with this three, you have a sound tax system. Okay, so the mnemonic for this one is FAT, F-A-T. Next, let's have another tax classification distinction. Now we'll talk about rate. And for the rate, we have three: progressive, regressive, and then proportional. So what's the difference? First, let me write the tax base here, and then the tax rate. If your tax base increase, and then it leads to the increase of your tax rate, that's called progressive. An example of this one is your income tax. If your tax base increase will lead to the decrease in your tax rate, that's called regressive. And in the Philippines, we don't have this. For proportional, if your tax base increase or decrease, whatever it may be, and then the tax rate is still constant, that's proportional rate. Okay, an example of this one is FAT, no? Because whatever the amount, it's still 12%. Next, determination of amount. For this one, we have two. Number one is specific. Number two is ad valorem. Specific is based on piece, while ad valorem is based on value. Again, when we say specific, per piece, no? You tax it per piece. And then for ad valorem, you are taxing it based on the value, like 10% of the value, etc. So that's your tax classifications and distinctions. We have others, but these are the important ones. And some of the tax classification and distinctions I already discussed earlier. And then another thing that you may want to take note of for general principles of taxation is the forms of escape from taxation. Okay, so number one, we have what we call shifting. So this is you transferring the burden to the other. And the best example for this one would be value-added tax. And this is echoing your indirect tax definition earlier, right? Shifting. Number two, we have capitalization. And in capitalization, this is what happens. You have a seller, and this seller reduces the price of any property that the seller is selling, and the reduction of price is equal to the future taxes that the buyer will shoulder. So in that case, it's like the buyer is not paying the tax anymore. Next, we have transformation. For this one, you are able to reduce the tax by improving your production method. Next, we have tax avoidance. And this is looking for, this is just my own words, looking for ways legally to reduce the tax. Next, exemption, tax exemption. Here you have immunity, right? While other people are subject, you are not because you have immunity. And finally, we have tax evasion. And among the six, this is the only illegal means, looking for ways to illegally reduce the tax. So I'll just write illegal. And that's it for the forms of escape. Number one, shifting, you are transferring. Capitalization, you are reducing the value based on the future taxes. Transformation, improvement of production. Avoidance is looking for legal ways to reduce the tax. Exemption is immunity. And evasion is illegal ways on how to reduce the tax. And then I will not write it here. We also have tax amnesty, which is a general pardon for those taxpayers who are not able to pay their taxes. And then lastly, I also want to include this here. I will talk about the classifications of individual taxpayers. Number one, we have resident citizen. So this is a Filipino residing in PH, Philippines, And then we have non-resident citizen, also a Filipino, but is not residing in the Philippines. Let me just write something here. So this is a Filipino in PH, also a Filipino, not in PH. For how long? If you are out of the country for 183 days and above. Because this is most of the time. When we say most of the time, majority of the year, you are out of the country. So, if 1 year is 365 divided by 2, that's 182.5. Raise it, 183 is majority already. And then we have resident alien. You are a foreigner, but you are in PH, the Philippines. Next, non-resident alien, also a foreigner. This one is in PH, but temporarily. If the length of stay is more than 180 days, that is non-resident alien engaged in trade or business. But if the length of stay is 180 days and below, that person is not engaged in trade or business. So let me just repeat this one. We actually have two under number 4. Non-resident alien engaged in trade or business. That's one. And then non-resident alien not engaged in trade or business. So we actually have 5. Resident citizen, non-resident citizen, resident alien, non-resident alien engaged in trade or business, and non-resident alien not engaged in trade or business. And by the way, engaged in trade or business is a misnomer because you are not actually looking if they are engaged in business. You are just looking at the length of stay. So remember that, no? This is misleading. Engaged in trade or business, but then you are just looking at the number of days. So what's the connection, diba? And then finally, no, just to add something here, no, these individual taxpayers are taxed on. If you are a resident citizen, you are taxed on world income, meaning sources inside and outside the country, you will be taxed. But if you are NRC, RA, NRA-ETB, and NRA-NETB, you are charged only PH income, Philippine income. Okay, so that's it for the general principles of taxation. But to tell you, there are other concepts, but I focus on the common ones, no? In the next video, I will discuss one of the issuances of BIR. It's called Revenue Regulations 8 of 2018. So see you on that one.